board has relaxed that in case of works tenders to have more participation. Whereas in case of service tenders, service contracts, the tenderer should have completed 35% of tender value of the similar service work. Similar service work. So here, who will give that similar service works list? That CME, PCME, where mostly the service contracts are executed. Even other departments also, where they undertake regularly these service works, they have to circulate the similar service works. The description of such similar service work has to be same in the tender notification. There should not be any deviation in the tender publication or in the tender document. Suppose if they want to modify the description of the similar service or a similar single work, then they have to take the approval of PHOD. Once the approval of PHOD is obtained, then they can incorporate. Otherwise, they are not supposed to amend or modify the description of the similar nature of work or similar nature of service already issued by the PHOD of the respective department. So here, the tenderer should have completed 35% of tender value for similar service work during the last 3 financial years and current financial year also, which includes the ongoing work. You please see here, ongoing work also is welcome. So out of the ongoing work, if the tenderer has already completed 35% of your present advertised value, he is also eligible to participate in the tender. Whereas in the case of works tender, it should have been completed, not incomplete work. Of course, there is one provision is there. Substantially completed work also is given in the works tenders. 90% of the work is completed, is said to be a completed work. Please kindly take note of this. In the case of works tenders, the work which has been completed to the extent of 90% and above, out of that also, if certificate is issued by the department, that certificate is also valid for consideration of eligibility. In the case of service contracts, there is no such percentage fixed. They have said it is an ongoing service work, out of which the percentage should be 95% of your present tender value. That is also valid. So here also, like works experience issued by private individual shall not be accepted, but certificate from public listed company or a private limited company having annual turnover of rupees 500 crores and above, those certificates are valid. So similar single service so which is specified by the competent authority. Satisfactorily completed means subject to payment of bills amounting to at least 35% of the advertised value. So the tenderers, they have to submit the documentary proof in support of their credential of having taken 35% of the advertised value. So this is about the technical eligibility criteria. Here, the credential will be issued by the departmental officer who is in charge of that particular work. So at what stage the certificate has to be taken by the contractor? After the final measurements are recorded, even before the final payment is taken, if it is under process, even at that stage also, the department has to issue that work experience certificate to the contractor to enable him to participate in other tenders elsewhere. They should not withhold that particular issue of work experience certificate just by saying that final payment is not yet made. That that reason will not be valid, because the instructions are very clear, because it takes a lot of time to process the final payment. So the railway board has very clearly said, once the final measurements are recorded without any objections from the contractor side or from railway side, at that stage also, they have to issue once the contractor requests for the same. Only thing in that work experience certificate, they have to mention the work done so far this much, final measurements recorded, final payment is under process. That much they can do. So this is about the technical eligibility. Next slide, please. Next slide, financial eligibility. So in financial eligibility, as far as works tenders are concerned, we actually consider the turnover to be V by N, where the V is called advertised value of the tender in crores of rupees, and number of N is equal to number of years prescribed for completion of work for which you have invited the tender. Okay, suppose, for example, you have issued a tender for 12 crores, okay, with the completion of time of 2 years. So simply it is 12 by 2 is equal to 6 crores. So any contractor, any tenderer who would like to participate in your tender should have annual turnover of more than 6 crores or more than that. So to fulfill the financial eligibility condition. Here, the qualifying period is 3 financial year and current financial year, unlike technical eligibility 7 years. So in technical eligibility for works is 7, whereas for financial eligibility, it is only 3 years, including the current financial year. So here, the certificate issued by a chartered accountant, auditor, or by the client. Client means the railway which has undertaken the work from the contractor. That certificate is also valid. In that, they have to indicate the value of the work executed, the period during which that value of the work executed, that they have to indicate. So that the department which has invited tender, they will calculate the total sum and they will see whether it is equivalent to the turnover prescribed in the tender notification or tender document. So that is as far as works tenders. In service contracts, if you come to service contracts tenders, T1 is the turnover of the tender should be 1.5 times of the tender value during the last 5 years. Suppose if your tender value is 1 crore, the intending tenderers who want to participate in your tender should have received 1.5 crores worth of amount or worth of turnover they should have made during the last 3 years, including the current financial year. So that is the first portion. So the supporting documents, in works tenders, it is an audited balance sheet duly certified by chartered accountant with stamp and signature and membership number, everything they have to give. And the pro forma is also given in the GCC for giving this turnover certificate. So this is important. Here also, the certificate issued by the department mentioning the value of the works executed is also acceptable. Okay, next one is T2 is liquidity. Liquidity means what? Anytime the firm should be in a position to pay the amount, that means their assets should be in a liquid stage to the extent of 5% of your bid value. So they should have a capacity to avail the line of credit and other financial support to meet the cash flow. That means, suppose during the course of execution of that service contract, if the department is not paying that amount in time, so the contractor should be in a position to meet his expenses from within his sources. So that means he should have an access to his liquid assets, he should have access to his bank line of credits and other financial means to sustain this contract work. That is the meaning of this. So another important thing, this is a liquidity portion. So a bid question may come, what is the liquidity percentage for the service tender? So that is, you can indicate 5% of the estimated bid value. So here this has to be issued from scheduled banks only. If net to current assets are negative, only bank references are considered. So that also please take note of this. So in the financial eligibility criteria, you have got another this thing. Next, QCBS, you see here, quality and cost-based selection. In case of this actually is adopted in case of consultancy services, used for procurement of consultancy services, not for other service contracts, please. This QCBS is applicable only for procurement of consultancy services, where the quality of the service is of main important thing. The quality of service is actually important for the department, not the other parameters. So mostly this is taken ISO 9000, ISO 9001. So such certifications this particular approach is adopted, QCBS. So bid evaluation is based on the weightages assigned to the technical and financial criteria. Higher weightage is assigned to technical criteria based on the importance of the quality services sought, quality of services sought. So this, as I told you, it is adopted in case of procurement of consultancy services.
Yeah, participants, please wait. The faculty will join again. Please wait. Yeah, participants, in the meantime, any queries, please raise the hand. Yeah, Manish ji. Yeah, please unmute Manish ji.
Sir, good evening, sir.
Good evening.
Sir, I want to know that service contracts are operated from IRAPS.
Yes, service contracts we are processed through not IREPS, it is GEM.
Sir, there was tender provision of general consultant and like PSSA tender.
Through GEM, not IREPS. Works
No,
it
sir.
is only IREPS.
Sir, there was manpower. The work is related to manpower.
Yeah, in that case, you can treat as the works tender.
Okay, sir. Okay, sir. Tell me in detail, sir, in class.
Yeah, sir will explain.
Okay, sir.
This is part of today's slide.
Okay, sir. Thank
you. Yeah, Govinda ji.
Who is the coordinator of HRMS in zonal level?
Who is the
Coordinator of
HRMS?
HRMS in zonal level, also railway board.
No idea.
BCPO, sir.
Yeah, might be. Ravi Kumar garu, Rajiv Kumar ji, Navila ji.
Sir, hello.
Yeah, Satish garu, tell me.
Sir, good evening.
Good evening.
Sir, what is advertise value and annual contract value? And difference.
Yeah, advertise value means it is tender value. Suppose the railway administration floated a tender value of 10 crores. When it was the lowest bidder, it is the 9 crores 80 lakhs. That is the agreement value or contract value. Or it may be 9 crores 80 lakhs, or it may be 11 crores, or whatever it may be.
Sir,
So tender value means advertised value or tender value. Both are same.
Both are same, sir.
Yeah.
Okay. Sir.
Yeah, Vibhaji.
Sir.
Yeah, 1 minute.
Yes, sir.
Yeah, please alert me if Chandrasekhar sir joined.
Okay.
I'll
Okay,
wait
sir.
Post. Yeah.
Sure, sir.
Thank you. Yeah, Manish ji, Rajiv ji, please quick.
Sir, ये सर ये टू पैकेट bidding system more than 10 crores में work contract होगा ना सर?
Yes, for works it is 10 crores and above. Yeah. 1 minute. 1 minute.
तो फिर सर ये 2 पैकेट सिस्टम में फिर ईआरए में भी तो जा सकता है।
Pardon?
ईआरए में टेंडर में भी तो जाएगा सर।
One minute, please wait. Please wait. The participants, please wait.
Sir, Chandrasekhar sir join. Nagesh sir.
So Chandrasekhar garu, welcome once again.
Yes, he joined.
Okay. So
Please come back.
actually, I could hear some two doubts raised in the meantime. Hello.
Yeah, please continue, sir.
Sir, please next slide, please. Financial eligibility criteria, we have discussed this slide. Please, next slide, please. Move on. Right of railway to deal with the bids in service contracts. So there are some situations where you will find two bidders quoting the same value. In that case, what is to be done by the department? If the two bidders are the lowest and the same, the bid whose technically more sound will be selected naturally. It is also same in the case of competitive exams where two candidates score same marks. So how to consider? First, they will see some age criteria, all those things. Here also, some criteria will be adopted in case if the two bidders are found to be in the same ranking. So if the two bidders are in the lowest and same financially and technically also, then the bidder whose cumulative annual financial turnover in the last 3 financial years will be taken. Here, they cannot match, So if the two bidders are found to be lowest and same, then who has to be considered? So whoever is having more financial turnover in the last 3 previous financial years and current financial year, naturally, that bidder will be considered for eligibility fulfillment. Next, if the bidder expires after submission of offers or acceptance of his offers, the awarding of the contract is cancelled. So it will not be taken to the next. If he dies, then the contract will be cancelled and a fresh tender will be invited. Suppose if the successful L1 bidder withdraws or fails to sign the agreement or fails to provide a performance guarantee, then the department can award the contract to L2 if he matches the price bid of L1, subject to ensuring no cartelization. What do you mean by this? Suppose a L1 bidder has been considered, a letter of acceptance has been issued to that L1 bidder, asking him to submit the performance guarantee, but he has not responded to that performance guarantee, LOA and the performance guarantee submission. Then in that case, then the department can go to the next, provided the validity of the L2 tender should be there. That is very, very important. Sometimes it so happens the validity of the tender expires. In that case, the L2 offer will not be valid anymore. So in that case, they have to take the validity of that L2 tender and If he is willing to accept the L1 price, then the contract can be awarded. But in case of works tenders, there is no such provision. It has to be the tender has to be cancelled. Then again, a fresh tender has to be. Should TC again accept? Yes. One message I saw. One of the participants raised. So in case the L1 bidder withdraws, the next for awarding the next L2, the TC has to meet again, or because the TC will not be aware, no, when they submit their recommendations for acceptance of L1 bidder, the tender accepting authority will accept that. This will be known only after tender accepting authority has accepted the bid. So the next further course of action is not known to the TC members. So again, the situation has to be put up to the TC again, ensuring that validity of L2 is available. Then again, they have to submit a supplementary TC recommendations to after getting the acceptance of the L2, then they have to put up the supplementary recommendations. Then the TC tender accepting authority accepts, then it is through. Whereas such provision is not there in the works tenders. So this is about the right of railway to deal with the bids in the service contracts. Next slide, please. Bid capacity. In works tenders, as I mentioned earlier, there is a bid capacity also, where if the bid value or if the advertised value is more than 20 crores, in addition to the eligibility criteria, the tenderer's bid capacity also will be tested. This is actually applicable in case of more than 20 crores only. So how the bid capacity will be calculated? Here some small formula is given. So either you may be asked two questions, where the bid capacity is stipulated in how much value, or what is the bid capacity of the tenderer, where they will give the maximum value of construction of works or payment received will be given, and the number of that is time period will be given, and you will be asked to calculate the bid capacity. So that is the, but there is no such bid capacity provision or clause in the service contracts. So based on the two eligibility conditions, that is technical and financial, straight away the tender will be finalized. So this is about the bid capacity. Next slide, please. Next slide. Now coming to bid security and EMD. So in the case of works tenders, works contracts, so the earlier it was called as EMD, earnest money deposit, but it has been changed to bid security in case of works tenders. But in case of service tenders, same nomenclature is continuing. I don't know why, EMD. So don't bother too much about that. Only please remember how to calculate the bid security in case of works tenders and how to calculate the EMD in case of service tenders. This is same formula. That is up to 1 crore, it is 2% of the estimated cost. And if it is more than 1 crore, you have to take first 2% of 1 crore, and excess of 1 crore, you have to take 0.5% balance, that is 0.5%. And the maximum bid security to be collected is 1 crore. Okay, it has to be restricted to 1 crore. And here also exemptions are given in works tenders. The any firm or any contractor who is actually registered as a startup with the Department of Industrial Policy and Promotions, they will be exempted totally from the payment of bid security. And some labor cooperative societies are there. If they submit their certificate of their registration, they can avail 50% of the bid. That means, suppose if the bid amount is coming to 10 lakhs, they can deposit only 5 lakhs rupees, availing 50% exemption by showing that certificate. But any startup which is totally, registered with the DIPP, they can avail full exemption. And the tender cost, of course, it is free of cost, because whatever be the value of the tender document, it can be downloaded free of cost, and the bid can be submitted. Previously, used to take tender document cost also, starting from 1,000 to 25,000 rupees. But here, no, there is no such thing. It is a free of cost. Whereas in case of service contracts, it is just called PMD, and the same procedure, same 2% of estimated value up to 1 crore. More than 1 crore, it is 0.5%. And here, the lot of exemptions are given in case of service tenders. So in addition to that, startups, there are, say, District Industry Center, Khadi and Village Industries Commission, Khadi and Village Industries Board, National Small Industries Corporation, Directorate of Handicrafts and Handloom, and MSMEs, startups. So any tenderer who submits a certificate issued by these organizations in support of availing their exemption, they need not be their EMD need not be collected.
Padmavati garu, any urgent only, please unmute. Sir, just a minute.
Your voice is breaking, sir. Can't hear anything, sir.
Yeah.
Voice is breaking.
Yeah,
Yes, sir.
It is okay. Yeah, please message me other participants. Is it voice?
No,
Is it
sir.
It
audible?
is okay.
It is audible?
Yes, it's
Okay.
audible.
Yeah, Padmavati garu, please check your audio settings. Yeah, please continue, sir.
It's okay. It's okay. Okay. Sure. Okay. So bid security and EMD, it is same both in the works tenders and service tenders. Only the exemptions are more in case of service tenders, unlike works tenders. As you know, after finalization of the tender, the bid security will be retained in case of successful tenderer. Then, in case of unsuccessful tenderer, it will be immediately returned through online. There is no need to take any fresh approval for releasing this bid security or EMD. The instructions are very, very clear. And this they can submit this FD or bank guarantee. So in case if they submit this bank guarantee, it has to be kept valid for beyond validity period 60 days. Suppose the validity of the tender is 60 days, they have to keep the BG validity 60 days plus 60. That is total 120 days. That is very important in case of cash or TDRs, no problem. They have to upload this. And suppose if they submit the bank guarantee 1 day before of the bid closing date, they have to submit original in the office of the tender issuing authority. That is very, very important. Previously, there was 5 days, but excluding bid to opening date, they have mentioned it can be submitted. And before that, they have to upload the scanned document of the bank guarantee. Okay. But this is about the bid security. And in case of successful tender, it will be retained as a part of security deposit. Okay. Next slide, please. Next. Back. No, sir. Yes, sir. Please stop here. Yes, sir. So, performance guarantee is another important clause, which is common to both works and service tenders. So, rule number 171 of GFR 2017. Please remember, all these clauses are actually, the basis is GFR, issued by the Ministry of Finance. So, they have covered all these things. Based on that only, the concerned ministries where these works are executed, they will be issuing further guidelines. The basis will be GFR for issuing these guidelines or clauses. So rule number 171 of GFR mandates submission of PG. The successful bidder in case of works tenders has to submit the performance guarantee equivalent to 5%. The time limit is 21 days. And suppose within 21 days, if he gives okay. If he doesn't give in 21 days, how long you can wait? 60 days. So 21st day to 60th day, the penalty interest will be levied. It is 12%. And from 22nd day, from the date of issue of LOA up to 60th day, it is 12%. And beyond 60th day, the matter is closed. So PG will be released after successful completion of the work physically based on the completion certificate issued by the competent authority. So this is as far as performance guarantee for works is concerned. Whereas in case of service contracts, it is 10%, unlike 5% of works tenders. This is 10% of contract value.
Sir, recently it was reduced to 5%, sir.
Sir,
Yes, sir.
any amendment has come, sir?
Yes, sir. It was recently. Yeah, participants, please confirm. Yes, sir. It was recently. It was reduced. I will share the letter, sir.
Okay, sir. Okay, sir.
Actually, there is no reason they are not mentioned. Actually, it would have been 10% because there is no security deposit.
Yeah.
That is the reason it was 10%, but recently it was reduced, sir.
Please kindly share that
I'll
letter,
share,
sir.
I'll share.
So accordingly, I stand corrected. If it is 5%, you please read it as 5%. I think submission date also will be same 30 days. I think there is no other change except the percentage. From 10%, our chief coordinator, sir, is telling it is 5%. Please kindly check it. We'll also check and confirm it to you. But from your part also, please kindly check it. Otherwise, tomorrow, without checking this, and if you go to examination, and if you get a bit question on this, unnecessarily you should not commit a mistake. That is my.
Yeah, it is confirmed, sir. Railway letter is there.
Yeah.
Sure.
And in that case, if it is 5%, is it required to? Some madam has posted, Nikhil Chopra is telling some 24 letter is there, May 24 letter. Okay, good. So other things, I think, is it required to be submitted in full or 2 stages, 2.5%? That also is, please kindly, all those things you please see, sir, as far as PG is concerned. Okay. Next, private message. So letter number issued by ENHM. So this is the problem actually. So I have not gone through that. ENHM means Environment and Housekeeping Management Department, as it is. That comes under Railway Board Directorate. Actually, this kind of change or amendment is required to be issued by Transformation Cell and Innovation Directorate. It is released by ENHM Directorate. So that is why I have missed it. Otherwise, I would have corrected it. Very good. I appreciate that participant to quote that particular letter. So please kindly change this particular thing as per that Railway Board letter issued by ENHM Directorate 24th May of 2024. So next slide, please. Security deposit. So security deposit is 5% in case of works tenders. So the bid security is required to be submitted by the tender is retained, as I told you earlier. The balance security deposit, once the bid security is converted as a part of security deposit, it is now called SD, part of SD. Now the balance security deposit is collected at the rate of 6% from each running bill. In case of works contracts, I'm telling, the rate of recovery will be 6% from each bill till it reaches 5% of the contract value. So that is about, it should come to total 5%. But now in service contracts, this also has to be checked. Previously, if it was 10%, there was no SD. Now, since they have changed it to PGA to 5%, I don't think security deposit clause is there. Anyway, it is subject to scrutiny, though no SD is there. Okay. So I got a message. There is no requirement of submission of security deposit in case of service contracts. Okay. In case of works contract, it is there, and that security deposit will be released only after completion of the contract in all respects, including the maintenance period, if any, and after obtaining no claim certificate from the contractor stating that he has no other claim except release of security deposit. So they have to give unconditional, unequivocal, no claim certificate in terms of clause number 43(2) of GCC. So here in service contracts, there is no requirement of SD at all. So don't bother about this. Okay. So next slide, please. So as I told you, before releasing the security deposit, we have to take a certificate that is called no claim certificate as per clause 43(2). Suppose in case of delay in release of security deposit, generally in civil works, we see a lot of delay taking place, not only in release of final payment, but also security deposit. There is a tendency to ask for interest by the contractors because of lot of delay. But here you have got one clause in GCC 16(3), where it is stipulated that no interest whatsoever will be payable to the contractor on bid security or security deposit or any amount payable to the contractor. Suppose there is a lot of delay in making one CC bill, 3 months or 4 months. This clause prevents from paying any interest. So it is called prohibition clause. But security deposits deposited in the form of, say, TDR or national savings or any other, government deposits, they naturally carry the interest, whatever that is accrued on them. But if the security deposit is retained in the cash and it is kept with railway, while releasing that amount, only the principal security deposit will be released without any interest. So, okay, shade of file in the middle. Then 16(3) of GCC prohibits. So just because we got this clause, it is not correct on our part to withhold payments for longer periods. So I have seen so many cases going to arbitration, saying that the railway has taken a lot of time, say in cases, some cases 6 months, in some cases 1 year also. How far it is justified to withhold payments that are due to the contractor for such a long time. So that is why they have requested interest payment also. But in courts, when the matter went to courts, it was decided that in most cases, it prevents railway officers from paying interest. But when the matter has gone to the court notice, that is arbitrator's notice, so he has got the right to award interest based on the merits of the case by quoting some Supreme Court judgments. So that is a very subjective matter. But the internal clause, inbuilt clause of GCC says no interest is payable to the contractor. In service contracts, there is no SD at all. Next slide, please. So advances to the contractor in works tenders. This clause is there. It is applicable. It is not compulsory. It is at the discretion of the PHOD, the department, whether to award advances or not. So these advances are generally given in case of tenders where the value is more than 50 crores. And there are 2 types of advances. One is called machinery and plant advance. One is called mobilization advance. Mobilization advance and M&P advance. It is limited to 10% of the contract value or 75% of the value of the new machinery. What is the difference between the bid security and some contractor? I am not able to see that message. Doubt raised. Okay, we'll talk about the clarification of the doubts at the end of this session. Okay, advances to the contractor. M&P mobilization. So grant of advances is to be restricted to only tenders where the value is more than 50 crores and above. So it is the mobilization advance will be released in 2 stages. First stage 5% on signing of the agreement. Second stage on mobilization of the site establishment and offices. So these mobilization advances or M&P advance, they carry interest, which is actually RBI rate, that is Reserve Bank of India rate, plus 5% on that. So when you recover these advances with principal, the interest also will be collected, and the interest chargeable is this much. So you may get a question, the MCQ, what is the rate of interest that is collected from the contractors towards granting of advances? So you can say this. Okay. So the recovery, stage of recovery of the advances with principal, what is the 15% to 85%? So during this particular period, the advances along with interest has to be recovered from the contractor. And the mobilization advance is taken against bank guarantee that is submitted by the contractor for 110% of the value. So when you are giving 100 rupees, you have to take 110 rupees worth of bank guarantee to, to safeguard the interest also. So this is about the advances to the contractor. Next slide, please. So rates for extra items. So rates for extra items means the items which are not actually stipulated in the regular schedule that is issued to the tender document. Suppose if the department requires, or if the contractor has notified for such extra items which are required to be executed during the course of execution of the work, without which he says the work will be incomplete. If such necessity arises, first of all, it is the duty of the contractor to notify to the railway administration about the contingency of that particular addition of new items. It is called introduction of additional NS items, or sometimes additional SSR items also. You know, Schedule A is SSR, Schedule B is non-schedule items. So in case of NS items, if such necessity arises, then he has to notify at least 7 days before. Then as per the accepted schedule of rate does not include the rates for extra items. The rates payable for such items shall be decided at the meeting to be held between the engineer and the contractor in as short a period as possible after need for the special item has to come to the notice. Suppose during the meeting, if there is no agreement between the DN and the contractor over fixation of the rate, then the matter will be taken to the notice of head of the department under clause number 39(1) of GCC. Then whatever rate he decides as per that clause will be final and binding. So in service contract also, the same procedure is adopted. Suppose if any new service is required, which is not there in the agreement schedule, then and if there is no agreement over rate fixation for such a new service, then the matter will be taken to the notice of head of the department of that particular office. Then whatever decision he takes, that will be final and binding. So there is no change in the procedure between GCC for works and GCC services as far as this fixation of rates for new items is concerned. Next slide. So the extension of time of completion of contract. So this is actually very, very important. In most civil contracts, there is no single contract which will be completed within a time. I have seen 95% of the contracts seeking extension. So here we have to see why that necessity has come, whether it is on railways account or whether it is a contractor failure. So in works tenders, works contracts, we will see two situations. Suppose if you have not adhered to the checklist, what I have mentioned in the previous class, like handing over of the sites or handing over of the drawings, GADs, or failure to show the site in time, or not ensuring the funds in time, all these situations will lead to railways account. In such case, if the necessity arises to grant extension, then the railway has to grant extension under 17A of GCC. In this case, there is no liquidated damages imposed, but it carries price variation clause if it is there in the agreement. Generally, PVC will be applicable where the tender value is more than 2 crores and where the completion time is more than 12 months. 12 months or more than 12 months. In such cases only the PVC will be applicable. Okay. So under railways account, if the extension is granted, it will be termed as 17A, then it will be without LD. Suppose the railway has done everything from railway side, but the contractor has failed to complete as per schedule, then if the railway has decided to grant extension, then it will be considered under 17B. It is called 17B is nothing but contractor's failure, granting of extension owing to contractor's failure. In this case, liquidated damages will be levied, which should not exceed 5% totally. The total liquidated damages should not exceed 5% overall. So this is about 17A and 17B, that is contractor's failure and railway's failure. Next is 17 is there, force majeure clause. Neither railway nor contractor is responsible for the delay in completion of the project due to natural calamities or acts of God, or sometimes law and order breakdown, which comes under force majeure condition. So this is called force majeure clause. This is applicable to both works tenders and service tenders. So in service contracts also, you have got a similar procedure or similar clauses. Only the clause number will be different from that to this. But in case of contractors, the extension will be granted with imposition of LD at the rate of 0.1% for each week, subject to maximum of 5%. That is about the extension. Next is variation in quantities. This is also same in similar in both the type of contracts. As I told you in the previous session, so this -2, -4%. So individual items, it is here we see it is item wise. Okay, individual NS items shall be operated with variation of plus or minus 25%. So up to plus or minus 25%, there will be no change in the agreement rate. So if it is going beyond 25%, it will attract -2% of the agreement rate. So if it is going still beyond 25%, 40% to 50%, it will have another incremental reduction of -2, totaling to 4%. So 98% of agreement rate will be paid to those items where the quantity is varying between 125 to 140%. COVID time also, force majeure clause. Actually, force majeure COVID situation is the force majeure clause is applicable in case of force COVID time also. That is why Railway Board, as one of the participants has raised this doubt. So I'm just clarifying. Ideal situation, COVID situation also comes under force majeure clause. So during that time, there was a lot of rescheduling of the contract has been done. Especially, I remember the mechanized laundries were affected like anything. Mechanized laundries, that is where they do this, linen will be, bed sheets, linen will be washed. The laundries were affected. So that is a FMC situation. It is called force majeure condition. Okay. Now coming to variation in quantities. So -2, -4. In FMC, PVC will be applied. Yes, PVC is there. See, in force majeure, when force majeure clause is applied, suppose 6 months time has been lost on account of force majeure, either due to COVID or any other natural calamities. So entire contract will be rescheduled to that extent. How much time has been lost? It will be refixed. The delivery schedule will be refixed without any LD with PVC. If PVC is already there in the agreement, subject to provision of the PVC available in the agreement. If there is no PVC, you will not get any PVC benefit. So it is subject to that. Okay. So in similarly, for limit for varying quantities shall be 100% as against 25% for other items. A minor value item for this purpose is defined as an item whose agreement value is less than 101% of the total agreement value. See, these minor value items are exempted in case of works tenders I am talking about. Similarly, the foundation items are also exempted. Sir, PVC's clause, one of the participants raised under 17B, the extension of time granted on account of contractor's failure, whether PVC is applicable or not. First of all, you please remember one thing. When agreement is having PVC, then you have to see whether PVC is applicable or not during the extended time on account of contractor's failure. Yes, PVC applies, but the lesser indices. That means the price variation clause will be calculated at the time of actual delivery and at the end of the extended time. Whichever is less, that will be paid to the contractor. Under 17B, negative indices. That means the lesser of the two situations, the amount will be calculated 2 times. That means before granting extension and after granting extension at the end of that period. So the lesser of the two will be paid. Whereas in case of PVC on account of railway, that is under 17A, he will get plus side. That means higher PVC only will get. He will not get the negative. So therefore 17B, 17A PVC applies, but subject to lesser in 17B. Okay. So like this variation in quantities, the same procedure, similar procedure is followed in case of service contracts also. In case of decrease in quantity beyond 25% of for individual items or 25% for decrease in quantity beyond 25% of individual items or 25% of agreement value, SAG approval should be obtained after obtaining no claim certificate. Please kindly remember, whenever any particular item where the quantity is operated less than 25%, then the department has to take the approval of HOD, stating that this particular reduced item will not be operated later in the next tender by giving the certificate. And they have to take SAG approval also. The similar procedure is applicable for service contracts also. Next slide, please. Vitiation in works contracts. In works contracts of value up to 50 lakhs, 10% vitiation is permitted. For contracts of above 50 lakhs, 5% vitiation is permitted. This is based on the Railway Board's letter of 2018, where they have issued same procedure for works services, uniformity in procedure adaptation. As far as vitiation is concerned, the same procedure is adopted. So up to 50 lakhs, 5% vitiation is permitted, and up to 50 lakhs, it is 10% of vitiation is permitted. For contracts of value above 50 lakhs, 5% of vitiation is permitted. Suppose there is a contract where the value is 40 lakhs, but the vitiation amount is coming to more than 10%, say it is 20%. Then in that case, the amount has to be limited to 10% only. This clause should be there in the tender document. Okay. What is vitiation, sir? Vitiation is nothing but the change in the ranking of the offers, the ranking of the values, the ranking of the offers based on the values quoted by the tenderers. Generally, suppose there are 3 tenderers. I am just giving an example because one of the participants has raised a doubt about what is vitiation, how the vitiation take place. Vitiation is nothing but the change in the value of the inter-ranking or inter-say position. Suppose there are 3 participants at the time of tendering, P, Q, and R. Generally, the order or the contract will be awarded based on the lowest value quoted by the tenderer. In this case, P has quoted the lowest value, but his lowest value is not same in all the schedules. There are 3 or 4 schedules issued in the tender. If you see schedule-wise ranking, he is not lowest in all the schedules. He is lowest in 3 schedules, not in 1. But overall value-wise, that particular tender is L1, that is lowest. So based on that, the railway has accepted his tender. But afterwards, after awarding the contract, what happened is, there is an operation of more quantities under a particular schedule where his original rate was no more L1. His rate was not lowest. So then the department has to calculate a fresh tabulation statement based on the quantity executed by this particular contractor vis-a-vis the rates quoted by all the tenderers originally at the time of tendering. Again, a fresh tabulation statement has to be made by taking the rates quoted by the tenderers with respect to the quantity executed by this particular contractor. Then, if the tabulation statement is prepared, then the existing contractor will not be lowest. The second lowest fellow at the time of tendering will become lowest. That is called, the change is called vitiation. So the change, if it is up to 10%, if it is acceptable. If it is going beyond 10%, below 50 lakhs, then the payment will be limited to 10% only. Whereas in case of contracts of more than 50 lakhs value, the vitiation amount will be restricted to only 5%, not beyond that. Suppose the contractor has got 20% more, railway has to suffer it. So railway will not pay. Railway will limit it to only 5% of the vitiation amount. This is called vitiation generally. That is why before awarding the contract, the department has to see whether the rates in all the schedules quoted. Usha Sri Prasad, she was asking the rate of LD to calculated. So it is in works tenders, the rate of liquidated damages is calculated up to 25% of the time period, beyond 25% to 50%, then beyond 50%. So one of the participant has asked the rate of LD to be calculated. So it is already given in the GCC, 25% of the time period, including the extension granted. Then in that case, I will just tell you. There are three different percentages: 0.1%, 0.2%, 0.3%. So this is about calculation of rate of LD in case of works tenders, works contracts. Whereas in the case of GCC for services, it is uniform, 0.1% for each week. I will tell you, up to 25% of the original period of completion, including the period of extension, it is between 0.1% to 0.5% of contract value for each week or part thereof. If it is above 25%, but up to 50% of the original period of the completion, it is 0.1% of the contract value for each week. If it is above 50% of the original period of completion, it is 0.3% of the contract value. These three percentages you please see in the GCC under 17B. When you calculate this percentage, if it is touching 5%, you have to limit it to only 5%. So the total LD should be restricted to 5% of the contract value only. Okay. So vitiation, I think I stand clarified. I explained you better. Next slide, please. Next slide. Measurements. As per clause 45 of GCC, contractor will be paid. So 45 of GCC measurements provision is given. So for the works at the rates in the accepted, that is called BOQ, bill of quantities, and for extra items at the rates determined under clause 39. What do you mean by rates for extra items which are not there actually in the original schedule of the agreement? They will be whatever rates that have been decided as per clause 39 plus the regular items which are already appearing in the schedule. So the measurements will be recorded and the measurement books are there. In engineering code, there is a format E1313. As per that, measurement books, in measurement books, the measurements will be recorded. Suppose in the service contracts also, there is a similar procedure adopted. Okay. But in service contracts, you have got some other books which are called log books or daily attendance. Some more things are there, but the pattern and the procedure is more or less same. Okay, whatever rates that are accepted as per the agreement, as per that only the measurements will be recorded, and accordingly the payment will be made. Next slide, please. One of the participants has read out who will prepare the bill of quantities. Generally, in railways, it will be prepared in works contracts. It will be prepared by the rail department only, not by the contractor.
Participants, better please message at the end of the session. Huh? Yeah, okay, sir. Please continue.
Measurements objections. So, in case of after recording the measurement, sometimes there is a scope for raising objections by the contractor. So, the contractor has right to take objection. So that provision is available. So, for that, 1 week's time will be given to the contractor if the objection is raised, and within 1 week, again remeasurement will be undertaken. And if after remeasurements, if there is found to be no mistake by the railway, then whatever expenses that are incurred after that, that will be debited from the contractor's payment. So if there is a change as per contractor, then accordingly the measurements will be recorded and the bill will be released. So this is with regard to objections. Once such objections are entertained and a decision has been taken, then that will be final and binding. Even again, contractor has no right to raise further objection. Only once he can raise objections. After that, there is no further scope. Suppose if he is not satisfied at the end of first remeasurement, he loses right. That means he has no right to further advance his objections. So this comes under accepted matter. That means matter which has been decided under a particular clause has no appeal further, either in before railway or in the court. Such unappealable matters are called accepted matters. EXCEPTED. Accepted matters means the matters which have been decided by the competent authority under a particular provision of GCC remains final and binding on both railway and the contractor. Such matters are called accepted matters. Okay, so the same provisions are applicable to address such issue even in service contracts also. Okay, so this is about the measurements and objections. Next slide, please. On account payments. On account payments, generally in works contracts, it is a duty of the department which has to prepare the bill as per the measurements recorded in the MB, that is measurement book. Accordingly, it is called contractor certificate, CC1, CC2, like that. So they are called on account payments. So once the final measurements are recorded, and there is no further scope for remaining work, then it is called a final contractor certificate, FCC. So till such time, it will be numbered as CC1, CC2, CC3, like that. Once final measurements are recorded, at that stage, a final contractor certificate will be prepared. After that, there is no further preparation of any, CC bill. But sometimes we have seen in some cases, even after recording final measurements, after preparing the final contractor certificate, there was some still some leftover work. Again, measurements were taken and it was found to be correct. In that case, they are mentioning as FCC1, FCC2, like that, which is actually not correct. So there should be only one FCC, that is only one final contractor certificate. FCC1, FCC2 means it leads to a lot of confusion. Practically, I have seen in my service, that is actually not at all correct. In that case, the last FCC, whatever recorded, that has to be given CC subsequent to the last CC recorded bill. For example, CC5, one CC1, CC2, like that, CC5 was prepared. After CC5, FCC was issued, stating that there is no further work left. Now, what happened in that contract? After issue of that FCC after CC5, there was again measurements taken. It was found that some work was measured up. So this FCC was converted into CC6, and whatever measurements that were taken subsequent to issue of FCC, it was shown as FCC, like that. So this kind of thing is not correct. It is not healthy. First of all, it leads to vigilance cases. So once final measurements are recorded, the department has to ensure that there is no further leftover work, and they have to take a no claim certificate even for final bill also. Please kindly remember, in chapter number 14, you have got the FCC pro forma. There, a footnote will be there. The measurements have been recorded finally. These are final measurements. There is no further leftover work, like that. Some kind of certificate is there, footnote is there. The contractor has to sign that bill. Once he signs the bill, it is deemed that work is completed in all respects. So there is no further work left over, like that. So the same procedure both for works and service contracts is adopted regarding on-account payments. Next slide, please. Price variation clause. This is all very, very important. You may get one or two bits, I feel. So board in the GCC of works contract, they have added this new clause. Previously, this was appearing under special conditions. Now, most of the conditions which are in special conditions of contract, they have brought under the purview of GCC, and they have kept minimum conditions in the special conditions, which are actually purely related to nature of the work executed. So accordingly, this PVC is appearing as 46A1 in GCC of works. So it is applicable where the tender value is more than 22 crores, where the completion period is stipulated 12 months and above. So these two have to be fulfilled. Earlier it was 5 crores. Now they have changed it to 2 crores with completion period of 12 months and above. Okay. Then whatever materials portion is included in the schedule, that has to be excluded while calculating the PVC. Okay. Suppose there is a contract where the value is, say, 4 crores. After that 4 crores, 60 lakhs is towards material supply. There is a track annual work. Example I'm just telling. There is a track annual work which is estimated to be 4 crores, and where the track fittings portion, that is new track fittings which have to be fitted during the renewals, the value of such portion is 60 lakhs. So when you are calculating the price variation for such bills, for such contracts, the material portion has to be excluded from the total value, and for the remaining portion only, the PVC has to be calculated. Okay. Then in service contracts also the same procedure, but here the time period is 18 months and above. Where the service contract time period is 18 months and above, for the whatever value that is prescribed in that contract, it will be applied. So here also material supplied free of cost by railway has to be excluded. Generally, in case of housekeeping, cleaning, other things, if the contractor is bringing his own, detergents or cleaning liquids or chemicals, the cost of those things has to be excluded while calculating. So in works tenders and service tenders, the components percentage has been given, but in service contracts I have indicated 3 types here as per GCC: housekeeping, consultancy, and others. What are the components? Here you find fixed component as 15%. That means, suppose if there is 100 rupees increase on account of PVC, railway will pay only 85 rupees. The 15 rupees will remain fixed element. That 15 rupees will not be paid. That is called fixed element. Only for the remaining 85%, based on the weightages given for each type of contract, the PVC will be calculated. Okay. What is the base month? How to calculate it? Generally, the PVC bills will be calculated by taking the quarterly averages. quarterly averages, not every month generally. So the quarter of average of 3 months, like that, the PVC calculation will be done. So here also PVC on account of railway during the extended period, whatever increase that takes place during the extended period, that will be paid. PVC, if it is on contractor's failure, PVC will be applicable with lesser indices. The indices figures, lower indices will be taken. One of the participants has raised PVC, whether PVC applies during the extended period under 17B. Yes, but with lower indices. So you have to do this. This is about the PVC. As far as work standards are concerned, for zonal contracts, PVC will not be applicable. The rates will remain final. Next slide, please. Completion certificate. This is very important. The completion certificate, as per GCC, 48 clause is there, clause number 48. Under that, once the work is completed to the satisfaction of the railways authorities, then the engineer concerned has to issue a certificate called completion certificate, stating that the work has been completed in all respects, okay, without any issues. So this certificate is required first for release of the performance guarantee. Then after that, security deposit will be released. The same procedure provision is available in case of service also. So the same procedure. So once this completion certificate issued, the PGs, everything will be released. Next slide, please. Contractor is not absolved by the issue of completion certificate. What do you mean? What do you mean by this? Once the completion certificate is issued, contractor should not feel that, yes, my work is over, there is no liability from my side, like that he should not feel. Suppose in the later stage, if there is found to be some fault or some deficiency or some shrinkage or some defect is noticed in the work, then in that case, we can invoke the provisions under this GCC, 48.1 of GCC for works, which says that there is some fault. So during that, generally this will be done during the maintenance period. If any defect or any shrinkage is noticed or any imperfection is noticed, then we can call upon the contractor to attend to that particular job free of cost. Okay, he is not free just by mere issue of completion certificate. So we can hold him liable even during this maintenance period. So that such provision is also there in the service contracts. Okay. Next slide, please. Post-payment audit. Post-payment audit means 51(2). Similarly, in service contracts also there is such provision. This says the contractor has been paid as per the generally the bills will be paid as per the measurements recorded. Sometimes some excess payment might have been made by the department. So that excess payment has come to the notice of, say, during audit verification or vigilance verification, or due to excess recording of measurements, or in generally earthworks like that, this thing will happen. So without verifying properly the initial levels and final levels, some excess payments stated have been made, and this particular thing has been noticed by the audit department. So this is called post-payment audit. That means after making the payment, the audit has been done, and during that audit verification, this has been noticed. So then in that case also, we can call upon the contractor by telling him that, by giving substantially how the excess payment has been made, in which bills, how it has been made, and he is required to pay it back to the railways. But suppose the contractor says nothing doing, I have received everything correctly, and the railway is not in a position to withhold any amount from the contractor, because by that time already he has taken away all the final bill payment, and he has also taken the security deposit. Nothing is with railway. Then what is to be done in that case? So a notice will be served to him, and after that a money suit for recovery will be filed in the court. generally in other works also where he is actually doing, in say in other divisions, there also this recovery can be done. Okay, so that is the post-payment audit provision is available both in works and services contracts. Next slide, please. So labor laws, this is very important. Labor laws common, most of the labor laws common to both works and services. But in services, you got more labor laws pertaining to the welfare of the workers, karmachari, like maternity benefits, all those things are there. So in addition to the some laws which are prescribed for works, you will find some more laws for service contracts, and the contractors, they have to abide by the provisions of these labor laws. For that, they have to give proper training to the staff. Generally for that, third party agency, which is actually licensed agency, they will be given training, and a certificate to that effect has to be taken, and saying that he is complying with all the labor provisions. That certificate has to be submitted to the railway, the documentary proof. So all these labor laws have to be abided by the contractor. So this is about the labor laws. Next slide, please. Determination of contract. Determination of contract, because as in the case of works contracts, we have got the right to determine the contract. That means we can pre-close or foreclose the contract on account of some problems, change in the policy of railway board, or change in the structures, or due to funds problem, or whatever it is. Then the railway can foreclose or determine pre-closure of contract in terms of clause number 61 of GCC. So with finance concurrence. Why railway decided to close? Suppose generally this happens during severe funds problem, or sometimes due to change in the decision making for construction of certain structure. There is suddenly some, best example I can tell you is, we have got, before introduction of concrete sleepers, we have got wooden sleepers and steel sleepers. There was a decision by railway board that in future we will go only for concrete sleepers, laying of track with concrete sleepers. So the railway has already awarded a number of contracts to contractors with laying of wooden sleepers and steel sleepers. So because of the decision of the railway board, we have to close those contracts. That means we have to pre-close those contracts halfway or after 25% under 61, saying that the railway does not require the balance work due to these problems. So in that case, finance concurrence has to be taken, and whatever work has been done by the contractor, to that extent, the payment will be released, and balance nothing will be paid. Even if contractor raises objection, it is a accepted matter because railway has got determination power. Similarly, if contractor fails, then it is called determination owing to the default of the contractor under 62 of GCC. Contract will be terminated by following certain procedure, like issue of notices. What are those notices? We can discuss in the next slide. And in that case, whatever performance guarantee, whatever security deposit, whatever other dues are there, they all stand forfeited. For this, no finance concurrence is required. The contract signing authority has got powers to terminate the contract on account of default of the contractor. Okay. Similar procedure is there in the service contracts also. The clause number only differs. Here, without liabilities, they can pre-close with finance concurrence. If there is a default of the contractor, then the contract will be terminated by following the same procedure as in the case of this thing. Okay. This is about the determination powers of the railway. Next slide, please. Next slide. Now here, before proceeding with the termination, what is the procedure prescribed in the GCC for works and what is the procedure prescribed in the services, that we'll see. So in GCC for works, we have to issue 7 days notice before the currency expires. Please remember, all these notices have to be served when there is a contract period available, not after the expiry of contract period, within sufficient time. Tomorrow the contract period is expiring. Today, there is no time for issue of 7 days or 48 hours notice. Suppose straight away if you terminate, it amounts to illegal termination. So this 7 days notice as per proforma 9, 10, 11, these are all formats given in the GCC. The same language has to be adopted, no change. Okay, wait for 7 days, then after that 48 hours, then wait for 48 hours to complete, then after that termination letter. If you come to service contracts, you see here performance notice has to be issued. Instead of 7 days notice, it is called performance notice as per annexure 12. The letter of revocation of performance. Suppose after issue of performance notice, the contractor has replied and he has done some work. After that, railway is convinced. Then they can revoke that performance notice without issuing.
Yes, performance is not satisfactory, no?
Yes, sir. If performance is not satisfactory, they will issue performance
Letter
notice.
of revocation of
Yeah. Then,
sorry, this is correct.
Sorry,
Performance is satisfactory.
Yes.
Yes, correct.
So here there is no time given. In 7 days notice, there is a time. So whereas in the performance notice, there is no time given. But whatever decision for revocation of this performance notice, it has to be done within the original currency, not after the currency. That is very, very important. Suppose if the railway is satisfied with the performance after issue of this notice, then they can take back this. So that is, they can revoke this performance notice by issuing another letter under proforma 13. Suppose there is no improvement in the performance, then they have to issue 7 days notice. If the performance does not improve, then after the 7 days notice, straight away termination letter will be issued. There is no issue of 48 hours notice in service contracts, unlike in works. Straight away after 7 days notice, the termination letter will be issued to the contractor. That is about the procedure for termination of the contract in works and services. Next slide, please. Then this is the last stage, settlement of claims or disputes. Generally, during the course of execution or after the completion of the contracts, some contractors will be raising claims or disputes with regard to non-payment of their bills in time, or non-handing over of their sites in time, or non-provision of blocks. Number of reasons they will make, and they will say they have suffered this loss and that loss. So for that, they will claim for those losses because of the railway's failure to adhere to that checklist, what I have told you. So they will put the blame with all the documentary proof, and they will try to ask for the claim on the loss or damages suffered by them because of the railway's failure. So such disputes or claims, how to address that? There is a clause in GCC for works, it is called 63 and 64. Similarly, in service contracts also, same provisions are available to address that adjudication issue, that settlement issue. Here, that GM will appoint arbitrator after taking the legal opinion. There's a big procedure will be there. Then out of that, they will see what are the accepted matters, anything is there. They will be excluded from the claims list, and the remaining claims only will be referred to the arbitral tribunal for the adjudication. So after adjudication, they will award they will give award. Award means it is a judgment or it is an order. Sometimes the order will be, the award will be nil, or sometimes the award will carry some amount, not as per actually what contractor has claimed. It all depends upon how railway has submitted the defense against the claims raised by the claimant contractor. So this is a very, very big subject. Here, the railway officers will be appointed. Retired railway officers also will be appointed. The fee structure will be there. they will not do free of cost. There is a free prescribed as per Arbitration Act, Schedule 4. So this is a very big procedure. What I mean to say is that to address this particular issue, provision is there both in works and services. So this is about this thing. At the most, you may be asked about what is the fee structure. Like that, some questions may come. For that, I can give you afterwards if you want. Otherwise, we have to see previously whether any big question has been asked regarding the railway or working railway officers arbitrator fee. So who has got the power? In the SOP, there is a provision under 36, item number 36, I think. So what is the fee amount to payable to a sole arbitrator? Any small bit question may come, but we have to check whether such bits have been asked previously in the examination. If one or two questions have come in, then you have to focus on the particular thing also. Okay. Next slide, please. Last slide, I think we are coming to end. Then there is a one railway board circular saying that a dispute adjudication board is there, but this is applicable generally in EPC contracts. This will come in case of more than 50 crores. Generally, the standing dispute or adjudication board will be nominated by the railway. They will go through all these things. So you can simply remember when is DAB constituted, where the value of the tender is more than 50 crores. Instead of routine arbitration tribunals, a dispute adjudication board will be nominated for adjudication of the claims. So this is about this thing. I think we have come to the end of this particular session. Next, nothing is there, no, sir. This is the end, I think.